Hey everyone, welcome back to Corporate Decoder, the place where we uncover Wall Street secrets one filing at a time. Get ready because today we're diving into Trailblazer Merger Corp's latest move, a story of extending deadlines and changing fortunes. Before we start, if you like getting straight to the point insights from these complex documents, make sure you're subscribed and ding that notification bell. We also have a fantastic community over on Discord, all linked in the description below, so join us there for more insider talk. Now let's get to it. This report filed on August 4th talks all about what happened on July 29th, 2025. It's like they're giving us a heads up on a really important deal they've entered into. So what's this big deal? Well, it's about a note or a loan, essentially. Trailblazer Merger Corporation, that's our company here. They have this note with Trailblazer Sponsor Group. Think of it as a loan from the sponsor group to the company to keep things running while they look for a bigger deal. Now they've changed the terms of that loan. The big change is when the loan needs to be paid back. Before it was a set date, but now it's flexible. It'll be paid back on September 15th of this year or whenever their main business combination deal actually closes. This means they're giving themselves more time to finish that big merger. And here's a really key part of this loan change. When the big merger deal finally happens, the money they owe on this note won't be paid back in cash. Instead, it's going to be turned into a special type of stock called preferred stock in the new combined company. This is a common move in these special purpose acquisition companies or SPACs. It basically means the sponsor group is converting their loan into an ownership stake once everything is finalized. But that's not all. This report also talks about them pushing back the deadline to find and complete a business combination. These SPACs have a time limit to find a company to merge with before they have to return money to investors. Their original deadline was September 30th, 2025, but they really wanted more time. They've already extended it, and now they've put more money into a special trust account to buy even more time. They've pushed that deadline all the way to August 31st, 2025. This is crucial because it means they're still actively working on their big merger plan and need that extra month to get it done. Let's look at the background of this deal. Back in July of last year, Trailblazer Merger Corporation I, which they refer to as parent here, made a merger agreement. This is the actual plan to combine with another company. So the deal involves merging with an Israeli company called Cerabra Strategy Limited. And it looks like Trailblazer Merger Corporation I itself will merge into another entity called Trailblazer Holdings, which is essentially just setting up the structure for the bigger merger. And the really exciting part for the future is that after all these mergers and changes, Trailblazer Merger Corporation I will be renamed Cerabra Inc. This tells us that Cerabra Strategy Limited is the main target company and the SPAC is basically a vehicle to bring it public. We're seeing the actual company name emerge. To make this merger happen, they filed a bunch of important documents with the Securities and Exchange Commission, or SEC. One key filing is called a registration statement, a Form S4. This document basically contains all the details about the deal for investors to review, including something called a proxy statement and a prospectus. When these documents are approved by the SEC, they'll be sent out to the shareholders of Trailblazer Merger Corporation. These shareholders will then vote on whether to approve the whole merger. It's a really important step in getting the deal done. The report also highlights who will be asking for those shareholder votes. The company and its leaders, like directors and executives, are considered participants. They want to get the shareholders on board, and it points us to another filing, their annual report, for details about these key people and their interest in the deal, which is really standard disclosure. They're telling you who's involved and why they might be pushing for this particular merger. Now, a big chunk of these reports are what they call forward-looking statements. These are basically predictions about the future. They use words like anticipate or expected. They're very clear here about the risks. One major risk is that the whole merger might not happen on time or might not happen at all. This is really important for investors to understand. If the deal falls through, it can really impact the company's stock price. Another risk is that they might not be able to complete the deal before their deadline, even with the extensions. This is a constant worry with SPACs. They have to move fast. They're also warning about how announcing this merger could affect Cerabra's current business relationships and how well it performs. Sometimes just the uncertainty of a big merger can disrupt things. Employees might leave or customers might get nervous. They also mention the risk of staying listed on the Nasdaq stock market. Companies need to meet certain requirements to stay listed, and sometimes these deals can put that in jeopardy if not handled correctly. And a legal disclaimer right at the end, they're saying this report isn't an offer to sell or buy any stocks. It's just providing information about the deal. As for the exhibits, we see that note again, dated July 29th. This is the key document that was amended. And then there's the standard interactive data file for the cover page. That's pretty much it for the exhibits mentioned. Finally, signing off on this report is Ari Rabinowitz, the Chief Executive Officer for Trailblazer Merger Corporation I, dated August 4th, 2025. Now, for my take on all this, Trailblazer Merger Corp is in that tricky phase of a SPAC, trying to get the deal done before time runs out. They've extended their deadline again, which shows they're pushing hard to finalize their merger with Cyabra. The conversion of the sponsor's loan into preferred stock is a typical and generally positive sign, showing the sponsor's commitment to the merged company's future. The biggest risk, as they clearly state, is the possibility that the deal could fall through entirely or not be completed by the new deadline. This is always the elephant in the room for SPACs. If they can't close this merger, investors might get their money back, but it means a lost opportunity. The fact that they are renaming the company to Cyabra Inc. after the merger strongly suggests that Cyabra is the true operating business they aim to deliver to the public markets. We need to see how Cyabra itself performs once this merger is completed, and how well the combined company integrates and executes its business plan. The success hinges entirely on Cyabra's actual business. If Cyabra has strong fundamentals and growth prospects, this SPAC structure might have been a necessary stepping stone. However, if Cyabra struggles, the SPAC vehicle and its extensions won't save it. It's a situation where the jury is still out. The company is taking steps to secure more time, which is a necessary action. But the real test will be the successful completion of the merger and the subsequent performance of Cyabra Inc. Investors are essentially betting on Cyabra's future, with the SPAC acting as the facilitator. Alright, that's our breakdown of Trailblazer Merger Corporation's latest filing. What's your take on these extensions and the upcoming merger with Cyabra? Do you think they'll pull it off? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. And don't forget to join our growing community, helps us out, and subscribe for more deep dives into corporate filings. And don't forget to join our growing community, helps us out, and subscribe for more deep dives into corporate filings. And don't forget to join our growing community on Discord. The link is in the description for even more discussions. Thanks for watching. See you next time.